All right, welcome everybody to our afternoon session here today on Friday, the 4th of November. If you do have any questions or comments, you can certainly drop them in chat. I will do my best to try to keep up with the chat. Sometimes it takes a little while and I might miss something, but feel free to drop in chat. Hopefully you can all hear me. Hopefully you can all see my screen, and then let's just jump into it. So we got a lot of stuff to cover today, so let's get to it. Again, this is really possibly a good, the squeeze is so oversold it won't fit on the screen. All right, so this might be a really good spot in here to consider a 0 DTE put spread. We're not quite at the bottom on the 15-minute, but on the 3-minute we are down, so we're down here. But we'll keep an eye on it. Squeeze is so far in here long on this short sell-off. Anyway, let's jump in and hit the things we wanted to hit today, and then we'll get back to that. So let's take a look at the daily charts on the ES. If we take a quick look at the monthly on the ES, and I know maybe this is difficult to see. I hope everybody can see pretty well. There's a lot of lines and stuff on here, so hopefully you can see well enough. You can see on the monthly here, I'm looking more at the internals than the price action. We've obviously been in this downtrending channel, but we just crossed over at the beginning of September. So in September, we crossed the 8 EMA, crossed below the 21 EMA. That's a pretty bearish signal. Not that we weren't already bearish, but that really lends some bearishness to it on the monthly chart here. You can see the PSAR dots ahead. So the PSAR dots show definitely a bearish tone. We would have to get well up into here to the 4160, 4200 range at this point to even stop that piece. You can see MACD's and is trending lower, getting wider, so that's picking up steam. The squeeze had already turned way back here, and that's now negative. Hasn't gotten into a squeeze yet, but we're definitely negative on momentum. And then you can see the stochastic momentum here has dropped pretty well down here. I can barely even see it on this chart, so it's not quite, it's not an oversold territory yet, which is also concerning. So anyway, monthly, and then I look at this, the DMI here, and I really follow the green line, which is if we're going to move up, this line really has to turn up and cross over the red or the negative line. You can see back here when this happened back in October, that's when obviously we made a really nice run as that green line continued to rise till it peaked right about here. Then you get a little divergence maybe from this August to a November timeframe as we started to stall out a bit, and then it started heading down. And then when it crossed here in April, pretty good sell signal along with MACD. That's when that crossed negative. That's when we broke the 8. So lots of little things to take a look for there. But anyway, ES on the monthly, still very bearish on this, which is why I'm thinking we're going lower. And if we look back towards this COVID low area here, I drew some quick fibs on here. The pre-COVID high was right around this 33.69. I definitely think that's where we're potentially headed, is for everything is testing this pre-COVID highs. But yeah, we could certainly hit the 618 fib, which is a favorite fib of mine. So that's 3180. So to me, that's the target at some point here, is the 3180. That's the monthly. How's the weekly look? A busy screen here as well on the weekly. Weekly's a little more positive. It's kind of mixed. I mean, MACD's trying to move up. RSI was trying to get going and then not. Stochastic momentum is really trying to reverse here, which it did for the last couple of weeks. And then this week, pretty poor week down. No cross here. The red line, the negative line on the DMI is heading lower. which means the momentum could be falling out. It's a lot of mixed signals on the weekly here, but we did break through the 8 exponential moving average, and we failed at the 21 EMA for the last 2 weeks here. That's a pretty bearish sign, which is why I'm overall a pretty bearish person at this point in time. Anyway, long and then short here. Let's just go a little closer time frame. Lots of lines. Everything in purple is a trend line. We came up here, hit this trend line that we had established back in here. We hit it, we failed. And then all your wicks are on the top, especially today. When your wicks are all on the top, that just means that the bears are winning the game every day, and the bulls just can't seem to get any traction here. Stochastic momentum still heading down, so it looks like we'll be heading down for a bit. So mixed signals. Does it mean a strangle time is there? Yeah, I think when you get a lot of these little mixed signals, now I don't know how mixed the signals are on the daily here, but on the weekly, I think you've got mixed signals. You're trying to move up on the stochastic momentum. You were trying to bottom, not bottom out on the DMI. You had some reversal and then a reversal of the reversal MACD. So I think on the weekly, that's a pretty good indication that there's some mixed movements here. I think the daily says we are going lower, but because of that, Eddie, yeah, I think strangles are still a good opportunity here, but I think the overall trend is lower for now, as we felt that. So there's ES. If we look at, I think UVXY comes up periodically with everybody. So if we look at UVXY, we're well below the 8 now, and the 21 heading lower. I mean, there's always heading lower at some point. Stochastic momentum though was trying to get going. We were trying to get something going on UVXY, and then nothing. So overall, this is a little bit bullish on UVXY, and then the VIX futures. Here, as we look at the VIX futures, super mixed on it. In fact, I keep adjusting. So VIX futures, the squeeze was firing negative on VIX futures, which was a positive for the market, but this is starting to slow down. MACD is already reversing. RSI, which is this little blue line here, the RSI divergence is pointing higher. Okay, so it's possible that VIX could be getting a little mojo back here as we move. What does that mean? It doesn't mean anything a whole lot to me, but I could care less about most of the VIX. But if VIX gets into some bottoming action here, this wick is pretty indicative of today and the action today, that if VIX starts to reverse in here, then we got some more pain ahead. Let's take a quick look at the dollar. Here, the dollar was up, it's down, it's off of its lows for the day. So the dollar continues to be at highs. I think it's more impressive when you look at the 1 year run on the dollar and you're in this pretty nice uptrend here. You've got a downtrend line. So, really the dollar over the last couple weeks, we look at the weekly, the last couple weeks on the dollar here have turned a bit bearish. Squeeze is dropping momentum, MACD is dropping here and breaking below the 0 line. Stomo's running out. The green plus line is dropping while the red minus line is rising, which is again a bearish sign. And then the ADI, which is this orange, is tipping over. So there's some little bit of bearishness on it overall for the last couple of weeks, which is what you're seeing here. However, we're still trying to fight with this 8 and 21 EMAs, but we're still near highs. We're only a few points, 3 points off the highs on the dollar. So right now, until this breaks down here and breaks this trend line, we're still bearish on the market. The TNX, which is the 10-year treasury, it's up and it's so close. You can see the little PSR dots here. Those little white dots. if we touch that dot, we're going to reverse and we'll get a bullish signal on TNX, which is bearish for the markets. And again, just looking at some basic technicals, the momentum is dropping a bit on squeeze, but changing on MACD. Stomo's higher, mixed here. It's just a mixed jumble. So maybe we're going to trade sideways for a bit. I think the big wild card is the fact that we have midterms on Tuesday. And if all goes as expected, the Republicans should take control potentially of both houses, which means probably a nice little bump for the market. It just means that the Biden administration and the Democrats won't be able to just push through really anti-business or tax type of agendas. The Republicans can pretty much stop that, but with a Democratic president, you're kind of gridlocked, but the market's kind of like that, and I think that's good for the market. So I think that's a reason for a little bounce. Do I think that's going to be sustained? Don't really know. I'm not making any political statements here. I'm just saying probably a bullish sign on Wednesday of next week if the Republicans do in fact take back both houses of Congress as expected. All right, so with TNX rising here, the 10-year rising, the dollar still near highs, it's going to be hard for the market to do much of anything till they fall. And then let's take a look at what's going on in oil and gold. So again, looking at the weekly on oil, if we look at the weekly on oil, you just had a PSAR bullish reversal signal today. So you've got stochastic momentum rising, squeeze momentum rising, RSI, MACD rising, really bullish action on the weekly. And then of course on the daily here, we have already had that little momentum swing and the PSAR went positive, but you're in a squeeze, got really tight Bollinger Band and Keltner channels here. And Bollinger Bands are inside the Keltner channel, which puts you in a squeeze whenever that happens. So you're in a squeeze, but you might be trying to pop through that squeeze today. Here, you had a bullish cross on the DMI. You got bullish on stochastic momentum. Everything's pointing on oil moving higher to where, I have no idea where it goes. If you wanted to make some predictions, which again, I'm not in the habit of wanting to necessarily make a prediction, could care less where it goes. I just want to know what direction. If I look at the fibs here, to try to make this a little easier for everybody, I don't care about the 236 fibs and the extensions. Let's just take a look at some of the basic fibs on this. So on this down move from back in June on oil till September when we started to bounce, you're breaking this down, you're breaking the longer downtrend. You're certainly moving up on this, shorter term uptrend. So that's a really bullish signal. What would be next? Well, obviously you've got the 618, the 50 here. So I think the place to look right now here is the 618, which is 105. So to me, the 618 is my favorite fib. I think this is the one to look for in here. I don't see any real pivot areas except maybe this one here, which is around 101. So potentially this pivot at 101, the low here, which is very close to the 50. So in here, it's certainly a target. I think we can break 100 on it. Do we go up to 125 and completely cover everything back? I don't know. You got some overhead on that. You got the 200 day here. You got to break the 200. You got to break the 618. You got to break the 50, and you got to break the downtrend line. So if you can break all of those, you can get up in here. That's a lot of resistance. So I think from a trading standpoint, you're probably in good shape here. I'm still okay with strangles, but I'm going to probably go long today and then leg into a strangle. Let's take a quick look at gold. Similar chart. I mean, gold's been in this long downtrend line, but it has hit it once, twice, now a third time on gold here. You're definitely entering a squeeze. You've got really tight Bollinger Bands inside of the Keltner channels, which is giving you the squeeze. But stochastic momentum pointing up, squeeze momentum's changing. MACD just went positive. You got RSI starting to rise here. You triggered a bullish PSAR signal on the daily today. You got this downtrend line to deal with today and the Bollinger Band piece here and the cross on the DMI, which is positive. This is a really positive move, I think, for gold. How high can it go? No clue, but I think this is also good for a trade in here. I still think keeping strangles on is totally fine. Why not work both sides? But I think we get a little bit of bump. So I'm going to place trades on gold and oil here probably during the session. Silver looks pretty much the same. If you also want to mix in some silver, I really don't, because it's the same doggone thing as gold. So I really don't need gold and silver. If I'm going to trade, I'll trade gold. I'm just more comfortable with gold. All right. So there's where we are in the markets. We'll take a look at some stocks later if we have some time, but I want to get into some tasty trade and some portfolio work today. So I'm going to get into both of these, and let me switch screen shares. Okay, and let's jump into today's account. So we're down a bit today in the overall account, mainly because this Caterpillar, pretty good update. It was up over 10 points earlier and failing a bit at it. So I'm not really worried about CAT at this point in time, but it's down. It's probably the biggest drag on the account, as well as the negative SPY puts that I have, the long puts. Those are down. Everything else doing fine for today. We're burning theta, so that's a positive thing. All right, so there's a couple questions that people had that I want to address first. So the first one I really want to jump into is adjusting 112 trades. And we'll jump into those. Let's just run through every position really quick. On oil, we do have a strangle here on. So this strangle, it's a winner so far. We're up $100 on this strangle in oil. For the December 13th, 15th expiration. We also have another strangle working here, which is up a couple $100 for. So overall on oil, we're up, for, what is it? It's $500 or so on our oil trades. So strangle there, strangle here, and then we also have a 112 trade on these. Okay, so we also have a 112 trade going on oil. If we want to take a look at what that looks like. Here it is in all of its glory. So here we are on this trade. When we put this oil trade on this oil 112, this was a like a $7,000 margin requirement to make $300, which is not the best return, but I liked the fact that we were moving positive back when I put this on, and I give myself some room down here if we drop. So, but either way, even if you have $300 winner, if this thing expires up here in the trap at $300 on a $7,900 piece, it's almost a 4% return on a trade that will expire in 49 days. So I'll make 4% in 40 days. It's all good. And that's my plan, is always 3% a month, maybe 4. Okay, I'm happy with 3% a month. If you hit 3% a month, you're doing really, really well, in my opinion. So this is a 3% APR trade, or 3% in a month trade, not APR, which is 36%. So I'll take 3% in a month on CL here. If I'm going to do something also on CL long, I'm taking a look at what we have in here, probably looking to get some kind of negative or some kind of a trade on with oil. I still like to probably start short and then maybe work myself into something longer to potentially leg into a strangle. So if I wanted to leg into a strangle, my typical strangles are around that 7 delta here. I might sell something around the $71 mark. It's going to give me a $530 return on $4,000 margin. So if I close at a 50% winner, I will make $265 on a $4,191 trade. That is a 6% return in 41 days. I like that. Nothing wrong with that. So let's just do it. All right, bam, we're in. So we're in, we're filled. We've got another long or a short put now on CL that we just entered. So we'll post that when we're done here. So I like CL here. I like oil. I think we're going higher. Gold, we have 2 strangles working already. This strangle, the first one, that's December 27th. They're both doing great. We're about to get closed out of the January one. So the January strangle is about to close for a 50% winner at any point in time, probably Monday, Tuesday. We're doing well on this strangle. Can we put another one on? We probably could. I don't think I need 3 on right now. What I would probably do is let's go out around 45-ish days. Let's take a look around the 7%, and we can leg into something here as well. 1525, somewhere around that 7%. Or a 7 delta, I'm sorry. That gives us a $380 profit on an $1,100 trade. So let's bump that thing up, giving us nice theta as well on this trade. So let's go ahead and get long by adding a short put on gold here. And let's go ahead and do that. We'll probably have to monkey with that one because the spreads are wide on gold. So it's 360, 380, probably somewhere in there, and let's split the difference. Done. Okay, and we're in. So we're in another short gold put for that time period that we just put on here, and we'll just let this thing go for a little bit. Pretty good return on this trade. As the recent trade was 77 short put. I'm trying to remember. I don't remember what that was. Was it 77? I can't remember what I just put on. Yep, I can tell you right now, actually. In oil. No, it was not 77. It was 71, I believe. Yeah, so it was the 71. But okay, Eddie already responded. I haven't caught up with all of the chat. So we just added a 71 strike put for December there, and on gold we just entered a 1525 short put for December 27th as well. So 2 trades. I'll post those later on when we're done here. Gives you an idea. On Russell, we've got a strangle sitting in here. We're at a 15% winner so far. There's really nothing to do here. I guess I could put in my order to close it at 50% and just let that thing sit around, which is what we'll do. So we entered it for 12. We'll put in a limit here for 6, and then we'll just go to sleep and wake up one day, and that'll hopefully be positive. All right, so there's a handful of those trades. Again, cat, we're all it's down today, but it was worse, and I'm still fine. I still have 21 days on this trade, and I still think cat is overdone. And if we're looking at cat, okay, if I'm taking a quick look at cat on the daily, we're right up here. I think maybe I did it already, but we're right up here on this longer term downtrend. Okay, so we probably have to go to the weekly to see it. So this high back here in June of last year, this was the high at 246, and then we came back up here, hit this line, and now that we're hitting it again. Will we break it? Who knows? Maybe we will. The weekly is fairly strong on it. So we don't have really the weekly in our favor. What I'm planning on here is on the daily here, I think this squeeze is so overdone, and you can see stochastic momentum's tipping over here. MACD is starting to tip over. And then as this thing has moved up, RSI is moving actually down. It's up today, but RSI has been stair-stepping its way down. So I think those are good potential opportunities that this thing could be running out of some steam for now. And all I care about is steam for a week or so on there, then it can resume its uptrend. So we are failing at this one line here. Let's see what happens here. I think if the market does continue to want to move higher, I don't know that CAT will participate as much. I think it's had its run. I just think it's tired. So there's my CAT take for you. I'm not worried if it moves or if it moves against us, it moves against us. I have a stop order here at a 2x stop, so I don't do anything. So now that you can actually put stops on two-legged or four-legged trades, finally, I can't put a bracket order, unfortunately. So as soon as Tastyworks gets their act together and finally can do bracket orders, that'll be great. In the meantime, I at least have the stop on CAT, so I don't really have to pay attention and watch it. Too much. SPY, I know we wanted to touch on a couple things, but let's jump on the SPYs. I do have 4 long puts that I have on. One of these is already, one of these has been, this is the older one, but this one's been in the money already. The other ones are just slightly down today and down overall, which is fine. I did sell 4 puts today. Of course, I sold near the high, but I sold 4 puts to cover these. Without this, I was negative about 160 some odd delta. So this gave me positive delta, and I'm okay with 7 days, 365. If the market runs higher, then this will just expire for a nice winner, and I'll make myself, 400 times 2, I'll make $800 on this thing. So I'll make $800 if the market goes higher. It's just paying down some of the cost of these puts as we move higher. I've already closed one set of short puts. I'm bearish. This is giving me negative delta in my account, and I'm totally happy with negative delta, positive theta. It's a beautiful thing to me. So I'm happy with that. I am bearish overall, and these are back out to March 31st of next year. It's 147 days out. It's 5 months away. So I really don't care what happens to these. If I lose on all of them, I really won't care. It's probably what, about a $10,000, $9,000 trade right now. I'm up $100,000 on the year in this account. We're up, a ton. I'm okay with this being a loser, but it's given me negative delta, which I'm happy with. I'm willing to take a little bit of a loss on the account, but I'm trading this, and I'm assuming to be right. I'm not doing this as a hedge. This is actually a trade that I'm thinking that we go lower over the next couple months. All right, let's touch base on an ES opportunity here. So I want to talk about what happens when you are getting close on a 112 trade, and why would I adjust it? So I'm going to make up a 112 trade here. Let's see what this looks like. All right, so let's say we had a 112 trade that we put on, and let me figure out. Let's say that this is our trade. I don't know if this is I don't know if this makes sense. In here or not. But let's just play around with it and take a look at what this looks like. Okay, so if this was a 1-1-2 trade, I really it's making sense. Okay. Okay. So I'm going to just kind of pretend that this is a 1-1-2 trade that we have on. We would have probably put it on for around $14 credit. Okay, so let's say that this was what the trade looked like, initially from a return standpoint. It may not be a perfect trade, but typically I'm putting these on for about $14 in credit. This is what they would look like. If we stay in the tail, we make 700. If we fall into the trap, we make around 2,200. Okay, that's the deal on the 1-1-2 trades that I typically put on. Let's say we started to move down here and we're getting closer to the trap. We may not even be close enough to this trap yet for this to make sense, but as we move closer to this trap, with 7 days to go is when I will typically look at that. I really won't do anything until I get close to 7 days and I'm running either in the trap or out of the trap. In fact, let's even go. Let's say that this is our trade. I'm going to make a little bit of an adjustment. I just want to model it a tad. Yes, I know Igor probably using 1. I could have modeled this better, but I'm still not proficient enough on it yet. All right, so let's say this was our original trade, but we're really getting close to the trap. We could even be in the trap or barely in it, but what does this look like now? Okay, this put, all right, is getting lower and starting to fall out of the money there. But really, the key here is what's this? What's this spread look like? Okay, so right now, okay, well, actually we're in the trap, so that was a weird curve because we're actually in the trap. Okay. All right, so we're actually, if we're in the trap, what does this look like? Well, right now, the difference between in the put debit spread that we initially put on for $6, this put debit spread is now essentially a $14 winner. Okay, from 49 to 63, it's a $14 winner in here. So what could we potentially do? 37.50, and I'm going to remove this one strike just to stop the confusion. All right, so this spread right now is a $14 winner, which we paid $6 for this put debit spread. But I run the risk of it running up and out of my trap, of which case I will just let the thing expire. I'll keep my $700 on my $7 total trade. But what if I wanted to take some of this money off the table now? Okay. What I would do is typically I would roll the 37.50 down. I've been rolling it down about half the distance. So I've been rolling it down 15 points. And by rolling it down, I'm going to collect $7 in there. So I had, a $14 width. When I roll this down from from here to here, it's going to give me a $7 winner, okay, or $7 in income. So I'm going to take, by rolling, I'm going to take $7 out of this trade in credit. Does it make sense? Yes, yes, or yes. Okay. Hopefully everybody's with me. So by rolling the long puts down halfway, okay, I took $7 in credit out of this trade. It's still going to leave me, okay, with my original trade, but now I have a $15 trap as opposed to a 30 wide trap. Okay, if we fall into the trap, the maximum I was going to take initially would have been the 30 wide, which was 30 points. Okay, the 30 wide, if I fell into the trap, I would take the 30 wide plus, okay, the initial $14 that I took in, okay, and that would give me, what is it, 44 times 50, that would give me about a $2,200 win, right? So and if I fell into the trap initially, 30 wide trap, 30 bucks, plus the $14 I took in credit to put on this trade. So closing in the trap was a $44 total credit times obviously the 50 multiplier, which was 2,200 bucks. But what I did here was I shrank my trap, but I took $7 out of the trade. Okay, so that $7 I took out of the trade has already made me 350 bucks. Okay, I still have a trade on that I spent $14 for, that if it expires, I'm going to keep that 700 from the 14 plus the 350 I just took out of that trade. If it drops into the trap, I'm going to have a 15 wide trap. So 15 wide trap plus that $14 I took in will give me, if it closes in the trap, $29 now instead of 44. It's all good. And $29 is going to give me a $1,450 winner plus the 350 I took in. I hope this makes sense for you, but the whole purpose of the adjustment in the 112 is we take $7 out of the trade. We still have a trap of 15 wide on our trade. So we took in $7. We still have a trade that we took in 14 for that could expire worthless for 14. We haven't really modified. We haven't done anything to that credit except add to it. And if it falls into the trap, okay, then we're going to catch another $15. We just won't capture the 30. So essentially we took $30 off or $15 off for 7. But that's the give and take is, would you want $7, a $7 guarantee today or a $15 potential in 7 days? Okay. With the market right now, potentially in a bullish-ish, even though today doesn't look like it, in a bullish-ish potential move, and with midterm elections coming up, if we get a bounce in 7 days, I could lose that. So there's the whole modification. So yeah, you get a sure thing by taking $7 out and shrinking your trap from 30 to 15. So I'm going to lose half of my trap from 30 to $15 trap, but I get paid $7 to do it. So there you go. Do I leave the short put of the debit spread alone? Absolutely. I'm not touching this short put at all. All I'm doing is rolling down the long strike for a credit. So I'm just rolling that long down for a credit. Unfortunately, we don't have any trades currently or any positions in ES that are in the money. So it's really hard to visualize it or with a current trade. But you guys get the point. So there it is. So I'm rolling down the long put. I like to roll 15 points, keep half the trap alive, take in at least $7 or more, which is $350, guaranteed extra money on top of the 700 guaranteed extra money, unless again, the market collapses and we could take a loss if we crash down to like 33,000 or something. In 7 days. I don't think it's likely, so I feel pretty good. Now we do have positions on in 7 days. So we do have all of these expiring today. So we have a BA 112 and a regular 112 expiring today. You can see they're all going to expire worthless. So there's nothing to be done. So one of these is a $15.50 one, which is a 35.60 3100. So this is one of the trades that's expiring today. It'll expire worthless. And then the other, when this one was originally a $15.50 trade. So when I'm looking at this trade now, on here. Okay, I'll make $775 today. Because this is going to expire up here in the trap. Nothing you can do. Okay, it's fully built. I mean, if we drop 200 and some points in the next 3 hours, I'll be thrilled to death. Okay, because those puts will print. I'm buoying my trap. Life is good. This is why there's no sense closing it early. I mean, who knows what the heck could happen? But anyway, there's where we are there, and then there's a big A trade on as well, which is this one, the 28.50. We're not getting down there, and we're not going to land in this 50 wide strike. So those are going to expire. So now we take a look at these 77-day trades. This is where I would start to explore where are we on our put debit spreads. You can see here the naked put part of the 112 and the BA 112, they're worthless. If you like taking those off to reduce your risk, go ahead. It's just not a need for me to spend. I guess you don't really spend any money on Tastyworks. So if you want, you could knock this out. I mean, we're not threatening these at all, but you could close those and just leave the put debit spreads on. So here's one. This is the, what is it? 36. Take a look at where we are. This is the November 11th. So we have this 35.40. Oops, 35.40, 35.10, 31.30. Okay, so this is one of the 112s. Okay, this one is going to expire. Now take a look. I'm going to look here and take a look. Now we are out of the trap on this trade. Okay, let's take a look. We're out of the trap, but I hate the fact that Tastyworks can't just give you the exact one you're looking for. Okay, here's the trade. So here's where we are right now. We are not near this trap. However, oops, there is it was $3 yesterday, but it's $2.50 here on the put debit spread. So you could technically close this trade today for a credit. Okay. So the key for you is making your decisions. What do you want to do? Do you want to just let this thing expire and keep your $738 because we put this on for $14.50? Okay. I'm going to, so next Friday, I make $738 on this trade when it expires. Or door number two is I can close the whole thing here for probably, $2. Okay, it's really not great, but for $2 credit. So you could take a $2 credit today, or no credit, no additional credit next week on this. So you got to decide what you want to do on these types of trades when you're there. So the 35.40, 35.10, this width here is 250. Technically, I should be able to close this today for $2.50 credit on top of the $14.75 I took, and I can free up buying power, and I can take in an additional $2.50. Or do I let it ride and see if the market is going to come down to my 35.40 or 35.10? I don't think the market's getting down there. So I think it might be a good opportunity today to just take this whole thing off and just close the trade for a $2.50 credit and see what happens. I know we went in for $2.55. That's all good, but well, and we got filled at $2.55. So you know what? We're done. We just took in $2.50 additional credit by closing today on this 7 DT left 112. All good. So I'm totally fine with that. So that's how you make an additional $2.50 on your trade, which doesn't sound like a lot, but that's $125. That's one ticket to the new Shania Twain concert or whatever the heck it is that you want to go to. All right, so 125 bucks gets me a nice dinner tonight or something like that. It's 250 or it's 150 bucks or $2.50 credit that I probably wouldn't get because I really don't think we hit 3,500 by next Friday. So that's how you do it. You just start looking at your positions. And as you go out to the next expiration, which would be the 18th, and you take a look at what are my put debit spreads, the 35.40 and the 35.10 here. This is worth $5. Okay, right now I could close it for $5 additional credit. Okay, and I can let this naked put just fade away and die. Okay, so do you want $4 here? Do you want $4 more today, or do you want to let it ride for 2 weeks and see if we kind of crash down here and this starts to create some money? So to me, 14 days is too far out for me to want to close for $4. Okay, $4, 200 bucks, not bad. Okay, and there's nothing wrong with that, but I think I want to let this thing play out. So that's why I really am only looking at once we get to that 7 DTE range, unless we start taking in the money on a bunch of these trades. All right, so I hope this made sense in here. That is the 112 adjustments. All right, so let's jump into a few more things today. So one of the questions was, let's do weekly strangles next. So the weekly strangle trades, pretty simple. Strategy for me is every Monday, and you can do it every Friday, every Wednesday. I don't really care. Wednesdays, sometimes people think that's a really good day to do it. I don't care. But what I'm doing is I'm putting on a really low delta strangle every Monday. It usually gives me somewhere between $9 and $10 credit. And then as soon as I have 4 on, as soon as I add the 5th one, which is 1 month, at 30 days, I take 1 off. Now, you can see I put in a limit order here because it helps me track them, because you can't track anything because you can't group on Tastyworks, which is the most asinine thing on planet Earth, unless you're using the web app. So I can't group. So the best thing for me is to put on like buy to close or good to close orders here, so I can track how they're doing. I can see, you know, these were at $9, $10. They're all nice winners so far, but one closed off today because I just leave this on. And, you know, if I close at 10 cents, I really don't get too upset. Why hold till Monday when I can close today? Maybe we rip 400 points by the end of the day. And if we do, I won't be super happy. But anyway, the goal here is I want to go out 30 DTE and put on a really low 3 to 5 delta strangle. So how would that look if today was Monday? We would go out 7 days, or I'm sorry, 30 days. So I'd go out to 30 days. I'd find myself something low between $3 and $5. I do look to see if there's something that has like really good open interest, like a really round number, like 3,100 or something. 2 delta's a little low. So let's just take a look at, and because I'm a little bit short-term bullish, long-term bearish, I might go a little higher here. So let's just say we're going to take this 3,200, okay, which is around a 4 delta. Again, the delta is not critical. It just gets me to my right area. Then I'm looking for something around that $4 or $5. And then I will go out here and find something around that same price, low delta. 4130 to me is a little close. So I tend to want to be a little more safe here. But let's just take a look at maybe like this 4170. So there it is. There's the strangle. 825 is not great. Maybe we go up a little bit more here, because I don't know that we're going to hit 3,200 in 30 days. So I might start to tick these up a bit just to get my $9 or so here. Okay, so I'm just playing with it a bit. I'm staying in that range. Okay, you could even go to 4,200, which is to me, I'm a little more comfortable with 4,200 in case we do want to rally. So somewhere around this mark, but let's get around $9. Put this thing on and then just let it go for 30 days. We'll take it off. Really don't have management of this trade. I'm looking to let it expire. Obviously, I've got a 10-cent limit order so I can track it. If it gets triggered like it did today, I get taken out a couple days early. Great. So I had one closed today, and the one I closed today was $9.75. Closed it at 10 cents. So I made $9.65, which is $483 in 4 weeks. Not bad. On a $1,800 trade. Okay, because these way down here, I'm just throwing numbers out, so don't copy it exactly, but you know, somewhere in this range, you're only looking at a pretty low delta. Oops, why am I delta? Or I'm sorry, $4,000 trade. I don't know why I said 1,800. $4,000 buying power on these. So it's a 10%-ish return if you're getting around $9 for it. So if I was getting $9, I'm getting a 10% return in 30 days. That's not bad. But I'm okay getting a little bit less, you know, that $8 to $9 range, but still a pretty good return. And I don't have a 50% profit take. It's just closing it full. Okay, so there's those layered weekly strangles. All right, so that takes care of the weekly 30 DTE strangles. That takes care of the 112 adjustments. Strangle versus iron condor. So if I'm putting on my typical 90 DTE trades here, let's say we'll go out 88 days on this one. I'll probably take a few notes here. So let's see what would happen if we trade this on both ES, and then we can trade it on either SPY or SPX. So on ES, again, I love something around that 6-7 delta, and 3,000 is a really nice number. I've already got a trade on there, so I wouldn't put something new on at the exact same strikes. That would just be doubling my risk. But anyway, for purposes here, and I like about 6 delta up here. I like round number. Perfect. So here's the strangle. Here's a 90 DTE strangle. This is the 3,400 strangle for around $27 here, which gives me a profit of, again, I'm going to close at 50% of this number, but let's just keep that in mind, 1338, and a buying power of 3428, which is the magic of futures trading and options on futures, is that you get such great BP efficiency on these trades that it's hard to trade anything but futures once you get comfortable. The leverage is just so good. So anyway, there's your trade. This is what it would look like. And if I did close this out, I'd make somewhere around, you know, $700 on $3,500 trade. There, what is it? 3428. So yeah, it's a 20%. 20% return, not too shabby. This will typically close itself in 30 days or less. If we were to look at what's 30 days, so what's the 30 days from here? Remember, it was like 27. 30 days from there would be around here. It would be selling right now for 11 out of the 27. So I would have hit my 50% within less than 30 days, typically 24. But that's a great way to see what that thing would be worth 30 days from then. Is I just go back 30 days and I take a look. Okay. All right. So there you go. That's how we would obviously set up the 90 DTE strangle in here. Now, what is a comparable iron condor? For those that were asking iron condor, are you talking SPX or something else? I'm going to use SPX as the as the trade, but I'm going to go out here to around 88 days on SPX. I'm going to go down again. The short was around 3,000, okay, which is around 7 delta. I'm going to use that. And I don't know for you, if you're putting on iron condors and you're trying to save money, I don't know what a reasonable width for you might be. But right now I'm going to pick a 50 wide. 50 wide is certainly not going to decay anywhere near as fast as 100 wide. Decay, but you know what? Let's go 100 wide for purposes here, which is going to cost you $9,000 to put this trade on. Remember, our futures was 3,400. So I'm not sure, it's not really saving you any money, but if you can't trade futures and you got to do something, you know, I totally understand. Let's just use a 50 wide because let's keep the buying power down. And then let's go back up here towards our 4,400-ish mark and see what that's going to look like. So let's, 4,400 might be too far out. Let's go 4,350, 4,400. Okay, so here's what the iron condor version would look like. So this is a $550 trade using 4,400 in profit. So for those, again, that don't trade futures, you can trade an iron condor with it. 560 on 4,440, okay, is still not bad. But remember, I'm going to close at a 50%, mark of this number. So that 560 is really going to be 280. 280 divided by 4,400, okay, is 6.4%. Okay, that's still not bad. So if you don't have ability to trade futures and you have decent buying power and you can trade SPX, okay, I can make $280 in 25-ish. I don't know if this would close in 25 days though. The way to find this out is what would this be in 30 days from here? I guess it would be 250. So it'd be 250 in 30 days, okay, versus 550. So it might get 50%, you know, in 30 days. And you still make 6% in a month, which is still fantastic. So there's no reason that you can't trade iron condors. And if you wanted to get a little bit better with it, you might do 100 wide, because your decay will be quicker because you don't have as much drag on these long options. I'm taking a 990 on 9,000. Again, I'm going to make almost $500 on 9,000. Again, close to 6%. If you have the BP, I would go wider, simply because it'll close quicker because you won't have the drag that these long options are putting on you. If you are still struggling with, I can't trade futures and SPX is just too gigantic for me, you could potentially look at SPY as well. They don't have an option in that same distance out there, but let's look at the same thing here in SPY, and let's go again around 7 delta, and we'll go 5-ish wide. Okay, I'm gonna use this for. Okay, so we go 5 wide here, and then we go way up here to 4,400. Okay. Okay, now take a look at what you're making. Okay, so if I'm trying to do this in SPY, not going to be very easy to do. Okay, I'm still going to use the same buying power as I was in SPX. Okay, and I just don't have the same width. You can get wider on these and try to make a little bit more, you know, and try to increase what you're doing. Okay, but still the profit's not quite there on SPY. So makes sense. So I think SPX is certainly something that's doable for you if you want to do iron condors versus strangles. If you have futures, there's no need to be trading SPX. Okay, so there's no reason to be doing that. Oh, and by the way, I don't know, Gabe, I think Gabe joined. I put the same little butterfly on, except I put it on for basically 0 yesterday, and it's up 23 cents. So yeah, Gabe, I've made 64 bucks so far today, 360% return on your trade. So we're hoping that we can get SPX down to 36.50 today. We got another 60 points to go. If we can get down there, we're going to hit a home run with this sucker. So you can always hope that we continue to sell off and watch this trade continue to go a little higher. Again, I only put 2 contracts on, so there's really not much money to be made there unless we get down. All right, last thing to talk about today, and we're at the top of the hour, so we're going to wrap up soon. Last thing to take a look at today is trading in a 10K account. So if I'm trading in a 10K account, I've only got a little bit of money to work with. And what I want to do in a 10K account, that's not what I wanted. I want 10K. So if I'm trading in a 10K account here, if I'm trading MES, now the only 2 trades I'm putting on a lot in here are 112 trades and 90 DTE strangles using MES. For me, if I'm doing the strangles, I'm doing 2 contracts of those. They're only taking up about $700 and to me, strangles are better than a 112. I'm going to put strangles on before I put 112s on. So as I'm scaling my trading, I want to get to 3 strangles here. 3 strangles is only going to use up a little over $2,000 in buying power. You probably want to reserve 50% additional, or double that money additional. So maybe I want to keep $4,000 in this trade. So I mean, if I have 3 on, I may only want to be using $4,000 in this trade on a $10,000 account. So I'm just going to put 5,000 here as a BP maximum, and really BP maximum is 2,500. Okay, because I want to keep 5,000 to the side, and then the same thing here, 2,500, and keeping the rest of the side. So I'll probably go maybe 50%, but probably in a small account, I'll probably only use 40% of my buying power. So for a small account, 40% max BP use. Okay. This is all I'm going to do in a small account, because span margin, if you're trading futures, can kick your butt if you are over 50% and you get a hefty down move. All right, so I've got a 112 trade on. Again, it's pretty much the same basic setups, okay, here for this, but I'm using 685 bucks to make 69. If this thing expires, worthless, I'll make $69. Ideally, I'd want to get, again, I probably want to use no more than 2,500, 2,000. So I could probably get 3 112 trades on in this account. I don't know why I just did that. So I'll probably leg into some more. This one was only at a 57 days. I might take a look at something like a 40 DTE in MES today and add something new on. There's a 42-day MES right now. I think I could probably do something like I gravitate right to the delta of 20 to start the trade, and then I'll fuss with it. Okay, well, got my $6. So there you go. And right to 20, 30 wide, $6. MES is very difficult to get filled in sometimes. So it's really difficult sometimes to get these on. And then I would go out, find myself something around 10, which you can see these spread widths are absolutely 100% absurd in MES, but that's what you get in MES. So for this trade, again, another 875 buying power there. This probably is a good trade. I'll probably try to put this exact trade on today. So I'll probably put this trade on today in this 10K account too, because I got to build it back up. But if I get at $700 in buying power, roughly for these trades, this one's 875. Yesterday was 685. I can probably put 3 trades on. So if 3 trades here make me $70 a trade each month, 3 trades makes me $70 a trade. That's $210 from the 112 trades. Okay, probably should have kept that. Okay, so if I'm making $70 each time on 112 trades, and I'm making half, okay, of this, these were half, I'd be making about $100 per strangle on 3 strangles. Ideally, that would be $210 from these, and it would be roughly $300 from these trades, and I'm making what, $500 a month. That's the goal in the 10K account. If you can't quite get that many trades on without exceeding 40% of your net lick in BP, okay, I only got $4,000 to play with. So maybe I can only use, if I'm using 2,100 here, okay, then I can only use like 2,000 here. Okay, even though this account is over 10,000 now, because I have had several winning trades on in this account. So I've made $500. Really the only time I've been working this trade. So in October we made money, but that's because one of the times I let this strangle go to expiration because A, I wasn't really paying attention, and B, there was no reason for me to want to take it off. I don't recommend it. I wouldn't do that. But that's the goal here. So the goal is I could probably get a few of these on. So that's a $10,000 account. I'm probably not trading anything else. I can't trade other types of things in here, because if I was trying to trade 90 DTE oil, okay, that's going to cost me, $3,000 in buying power. I can't do that. It's too big. Oil's too big. Everything's too big. I got to do MES. Can you do the MCL options? You can, but man, I don't know how good they are. Actually, they don't look terrible. So you might be able to put on an MCL trade, which is the micro crude oil futures. So you have the micro crude oil futures. That's a possibility to do that right now. That would be if I put on like the 60, I don't know what we were looking at earlier, but like, let's just say 66 and 131. Okay, that's actually not bad. It's actually a pretty good opportunity here. I might actually put that on. So let's see if I can get filled on a micro crude oil future, because doing the 66 131, I'm going to write it down up here. So this would be a strangle 66 131 on MCL, and that is the January 17th trade. Okay. All right, so I'm building this trade up. This will probably be trade number 12. I'm going to do this. So I think let's look to do this. My goal is to get $1.36 on this thing. The one thing with oil here, the BP usage on this is only $360. And this is a $100 multiplier. So it's a, at 50% at $136. Okay. I know this is maybe a pain in the butt for everybody to look at. And don't worry about the DTEs because I didn't put a day on. Okay. So my total cost on this trade, okay, because this is a $100 multiplier. Is it 272? Oh, because I have two quantity. Okay, got it. So it's 136. So if I cut that in half, I'll make $70 on 360. That's pretty doggone good. Okay, so I think that's the next trade in the. I think that's the next trade in the 10K account, and then I'm going to add these on. So if you have 20K in your account, again, I would you max out at 3 strangles. You can start to get a few of these trades, more of these trades on. You might be able to get to 4 trades. You might put an extra spec trade or 2 on here. Maybe, I don't know what gold looks like, but you can put it in 112 on somewhere else here or something. Once you get to that 20K mark, then I got to look to see, is it worth it for me to start popping on potentially ES or something else? But I'm sticking to 90 DTE strangles, 112 trades, and maybe some strangles on oil or gold if I'm using the minis. If you're starting to get higher on it, then now you can start to consider doing some trades on ES and starting to bulk these up with some of the other strategies that you have. I've got 90 DTE strangles. They all came off, so I got to rebuild. I'm getting to 4. So if you're in that 10K account, I'd go up to 4 until you can afford to go up to ES or something. Typically going to go a little bit more on the 112s because I want to keep it rolling out at 40 some odd days. I don't really want to keep these 37-day versions on. And then I would not recommend the weekly strangles at all, but then you can look at spec trades out there as well. Potentially a strangle on, MCL, which is fine. There's also, there's not one on gold. Oil is probably the only one that I would consider doing something like that on. So that's how I would scale up the account, is you just start adding a few more strangles and 112s till you get to where you're probably putting on 4 strangles, maybe 5 or 6 112s, and maybe a strangle or 2 in low delta strangles at 45 DTE, maybe something along that line. Maybe you dabble in something else. Just be patient, slowly crank that thing up. $300-400 a month on 10K until you can add more to it. My suggestion is that you keep plowing money into that account. Okay? Once you get comfortable, just keep putting your money into that account so that you can the quicker you can get that account to 20K. And again, can you build it to 20K at $500 a month? Sure, $500 a month is going to make you $6,000 a year. It's going to take you 2 years to get there. Okay, if you start putting in $500 a month out of your paycheck into that account, it's also going to make you $6,000 a year. Now you get there in 1 year, you're at 20K. By the end of next year, potentially that account can be closer to 30K. Okay, or maybe even more. By the next year, you can be probably at 50K. Right? So pretty quickly you can get up there. Once your account gets bigger, it gets a whole lot easier to put these potential trades on. All right, so we've gone over by 15 minutes today. There was a lot to cover. I really didn't get to too many stocks today, which again, I don't think anyone cares a whole lot, but ES is still up barely on the day. Meta, dog, but this is extraordinarily oversold and potentially starting to reverse. I hate Meta. I hate the leadership there. I don't personally dislike Zuckerberg at all. I just think he sucks as a leader. And yeah, I think he should just be the CTO and go get a CEO that knows how to run a company. I think if they announce a new board and a new CEO or a COO here as well, I think Meta can possibly pop in easy 30, 40 points. So I think this thing easily goes to 120 or more on any positive news of new management. So I think I don't think the risk of going down is a whole lot more from here. Even looking at the weeklies, it's in a squeeze sell-off. You are really oversold. I don't know that it's bad to actually consider selling something on Meta here. Apple, 100% think this thing goes worse. It's going worse today. I don't think you guys believed when I said I think this thing can go, down into the 80 mark or something, but that is the COVID high. So there's the COVID high, or pre-COVID high on Apple, okay, which is like $81. Okay. I think it's absolutely doable considering that you're seeing Google getting doggone close to its pre-COVID high already. Microsoft getting closer to its pre-COVID high. NVIDIA, I don't think I had it. NVIDIA's a little ways away, but getting closer. Amazon has already broken down through its pre-COVID high, which was 108. So Amazon smashed the pre-COVID high already, and it's already broken it. Everybody's breaking their pre-COVID high. Okay, and Meta destroyed the pre-COVID high all the way back here in February. So if everybody's doing it, and Apple just broke this pivot point today, okay, it had stopped there, it had stopped there again, it had stopped there again, it closed on that number, it closed on that number, it stopped there again. It's a pretty significant level on the weekly here chart, so if we switch it to the daily, okay, this is a pretty significant level, and you're breaking it today. You can see how we've just been stopping at that level dating back for quite a few months. And does this look like it's done? It's just fired negative on MACD today. Okay? It only fired negative 3 days ago on the PSAR. The momentum is coming out of the squeeze, and you're entering a squeeze, or you're firing on a potentially long squeeze. Your stochastic momentum is down. You had the DMI crossover here. This was the short on Apple. I did not short it. I have a difficult time shorting, but I think you could certainly have sold calls here on Apple and be in good shape. I definitely think Apple is making a run. First run 200 at 110, but I think 81 absolutely doable. I don't know who it was that said that that's a catastrophe or something. Yeah. Why do you think I have long puts in SPY? Apple controls the market, and it's dying. Okay, it's going to retrace and give back everything to this pre-COVID high. Okay, if I'm wrong, I'm wrong. It's all good. Okay, but I've been right so far, and I think it's heading down there. Tesla, same thing. I think this thing could be heading towards pre-COVID highs at 60, but I think it looks healthier than other ones do. So the 618 fib from the COVID low to the recent highs, okay, that's here at 472, which is also this pivot line or this support line here at 180 or something like that. So somewhere around 170, 180 is the next stop for Tesla. You're just firing negative. You are oversold on the weekly. And then on the daily here, you just had a PSR signal today. Okay, it's telling you get the hell out of here. And you can see that everything's diverging completely negative for Tesla. So expect that this low to be broken. If Apple and Tesla, okay, are sinking and Amazon's sinking, even though Amazon, Google, and Microsoft, I think have less to fall, I think they still all fall. And if they still all fall, where do you think we're going? You know, you really think we're hitting all new highs at 4,300 and 4,400 or something along those lines? Here's where we are today on ES. Okay, below the VWAP, sitting down here, and probably about to turn over, although you're starting to see on the 15-minute a bottoming here and a turn. So I think this is a potential area on any further selling here to maybe get put credit spread on or something below this area if you can do it safely. It's already 122, so I don't know that how far you can get away. Right now you're negative here until this thing drops down below the 40, and as soon as it drops below this 40 and makes any turn and starts to coincide with the 15, that's when I think you get a nice break, in my opinion. And the last thing I'm going to mention here is, let's draw. Okay, so here's the high from the day to the low down here. I'm not counting this crazy outlier. Okay, so here's where we are. You made a run to the 23.6, completely failed. You made a run, didn't quite make it to the 38, so you're failing here. But I would expect to try to at least run to the 50 or the 61 if we make this turn and get moving. So, oh, did I not have it completely on my screen? I may not have. So this was the move down in here on the 3-minute. So I think the 3 minutes it's on its march, potentially higher. I must have not had the full. I must have been over here like this. So. Yeah, so we have already made that turn and have moved higher. So it's potential. You could get some upward movement, but you got to break this 23.6, which again, not my favorite fibs. So I really don't care about those too much, but let's make a run to the 3.8. Let's see if we can make it to the 50 today. That would be my goal if we can break above this 8 and 21 here, which is providing some resistance. Okay, so let's see, you know, I can't trade. I'm below the VWAP, really hard for me to go long below VWAP on this move. All righty, there you go. Lots of stuff to think about for today. And I'm going to wrap it up here. This is an hour and a half. So appreciate you guys hanging in there, spending some time today. And we'll see you guys all in Slack. Have a fantastic day, guys and gals.